Good evening all. Ira Epstein of Linn & Associates with your SPDR ETF wrap-up. And this wrap-up is for Wednesday, the 16th of June, 2021. Well, what an interesting day. Let's get right to what the Fed did. These are all the highlights. If you want, you can hit pause and they'll stop and you can read them. I'll stand back here so you can see that. Simply put, the Fed agreed to talk. The Fed said that they have begun the process of talking about an eventual tapering. So they're not talking about tapering. They're talking about the talk they're going to have to talk about tapering. Interesting. Dot plot. I was looking to see how many more members would shift gears into the idea of a 2022 rate hike. Now we have a total of 7. We had 4 before this. So that's good. The Fed played a little bit with the interest rates on the excess reserves. They took them up to 0.15 from 0.10. That was it. I give you all the numbers here, like 11 out of 18 projected at least 2 quarter-point interest hikes increases for 2023. Now let me repeat that year. 2023. We're in 2021. 7 members are looking for a rate hike, 1, in 2022. So that's the other thing. And the median dot plot shows the members anticipate raising the benchmark rate to 0.6% by the end of 2023. And right now that's sitting at 0 to a quarter point. So you can see what it is. But that's a long way off. So you always look at that and you see what the market did. Now, the hardest thing for me is talking to traders and telling them not to trade. I have done that now. Today is Wednesday. I began Monday telling traders, I really don't think you go through these reports. Now, I realize stocks, it's harder to get out of those, and I don't say that. Stocks are different. It's the ETF, the SPDRs, these indices. I'm telling you, they're trading vehicles. They're not investment vehicles. And as such, you want to be smart with them. Well, as a futures trader, we're a whole different breed. You're just learning this as this has all come about in the last 5 to 10 years for you. You don't stand on that train track as a bullet train is running at you, and at the last second, you're going to guess which way should you go. Why are you putting yourself there? Grab some popcorn, watch it go by. Let somebody else get smashed up. You come by and pick up the pieces. Then you get the yin-yang impact. Let me explain that one for you newbies. The market, the FOMC statement comes out at 1 o'clock Chicago time, p.m. At 1:30 p.m., Fed Chair Powell begins a press conference. It's normally over 2:20-ish, generally in that range. I've been watching these for years, and that's how he seems to be doing them. Okay. So, what time is that in Asia? Those people are sleeping. In Europe, if he begins his press conference, in some countries it's 6:30 at night, others it's 7:30. You think the traders are at their desks at home doing their trading, or are they eating and doing other things already at that hour? That's how life works. So the yin-yang is first Asia gets to react to it as they wake up and they go, okay, what's the American markets doing in the indices and like, and they begin their trading. Does it get worse or better? Here's the other event. Many of the futures markets close, or let me say this right, settle at 12:30 p.m. Eastern time, which, well, actually 1:30 Eastern time, 12:30 Central time, before the Fed makes any announcement. Others are going to settle, the word is settle, as the Fed is still talking. So after the Fed and the reaction all comes in, settlements have been determined, and then the markets trade up to 4 o'clock, Chicago time, 5 Eastern. I know it sounds confusing. It's the way it works. So you get big movements in gold and everything. They're not as big as you think because it's determined from a 12:30 time frame, the gold price, where did it settle, and it traded another 3.5 hours. And it got to see all that information. When I look at ARK, I told you that the one thing you had to be careful of was this market rally that would carry into key moving averages and run into the buzzsaw at it. I've said that over and over to you. The trend is up. Today's low was 1188. That is under 112.14. So now you have a higher high, lower low pattern. You are out of the uptrend that actually began all the way back here, had one correction to it. Now you're in another correction phase. Where did the market stop? I want you to look at the 200-day moving average of closes. Generally, you get up to these numbers or through them. As you come back up, what they are is resistance. As you go down, they try to be support in markets. Pay attention to that. What's the next number that I always look at? That line in the sand, as I call it. If you take my charting course, you will learn these, not only the terms, but the logic here. Right back to the neutral number of the 18-day average of closes. What else are you looking at? Where did the Bollinger Band come in? How many of you have taken the enhanced Bollinger Band course? It's on the website, IraEpstein.com, under education. Why don't you learn what I teach? I think the pros came out. I think they're looking, and I think they're just sitting at this point. There is no trend right now in that market, and the momentum was totally lost on the upside. It has to restructure itself. BBEU, all right. So you're going to lose when you reopen in the morning the embedded reading intraday. I don't know if it'll stay lost. But the market, the last break low was here. You went right through that today. So you had a huge outside day down. Instead of hitting the upper Bollinger Band, it would have hit what we call a window envelope. And I plot those for my paid subscribers in the morning. At 8:40 in the morning, remember, I start recording typically, and I start posting it after 9 o'clock, that recording. I sometimes wait to just after that, because there's so much economic data that comes out in between 7:30 and 9 in the morning. So I want to get it to you. I want to show you what it's done, the logic as to what it's doing, and how it should impact these markets. Suffice to say, a neutral stance is now warranted if I'm right. And we'll see if it loses that. It hasn't lost it yet. It's got to prove that it has. Right now, the bulls are in control until that red line closes under 79. In PAVE, now that President Biden is through with the nonsense of the Putin meeting, and it was nonsense. I want you to learn this word, nayet. Nayet means no, right? A 6-hour originally planned meeting went to 4 hours. I can just imagine President Putin, nayet, nayet. No, we didn't do it. We don't hack. We don't poison people. We don't do any of that. No, 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 no. Okay, we'll exchange ambassadors again. And they both walk out. Well, that was constructive. Here you are down to the lower band, some short covering, but now the game begins. Are we going to get an infrastructure play or not? A lot of markets are counting on this, and that's going to be key. Another thing, one of the things that had interest rates go the other way, in other words, falling rates, not rising, was the market believes this is not going to happen. And that's $2 trillion originally that you'd have to borrow in some way or fund in some manner, and that would put pressure and drive interest rates higher. Maybe that's not there, and that's been the balance. Don't know. AMC, I told you, please sell stock if you're going to stay in business. I love movie theaters. You need to get out of debt. And the market back and forth here, still very much in an uptrend, not showing a sign of coming out. I like that the 18-day average is in front of the last break low. If it goes up again, the 74.26 area should be resistance. Support 40.61. You're sort of in the middle of no man's land, but the trend is up. Then we get to the semiconductors, and again, please take that Bollinger Band course, the enhanced Bollinger Band course on the website. Got up to the numbers and look at how the market pulled back, and it's lost its embedded reading. The odds now favor, if you don't get that reading back first thing in the morning, that the market could extend the break to 178.40. That doesn't take it out of its uptrend, but now you've hit your targets, and the first part now is going to be the 100-day average. Is it going to act as support or not to kick the market back up there? If it lets go, you probably drop to the 18-day average, and then on the way up, that 100 becomes some more resistance. Back and forth action. PAVE, I've talked about. I don't know why I have it in there twice. Got to get rid of that. ESGU, higher high, lower low, momentum loss, game over. So today's action just took this out of the marketplace. Boom. Game over. Now you're neutral again. Energy sector, overbought as can be. I'm watching how the market's reacting in the futures. I expect a pullback in crude. I still think $74 is very high right now. I'm probably wrong, but that's what I think. I am certainly not in the bear camp, but I am in the camp that one shouldn't be long the futures up here. And that says a lot. Now the question is, will this hold on? Don't know. The fact that it's just in an overbought market keeps me away from it anyways. When we get to the emerging markets, you got an all-out bear signal. Lower highs, lower lows, momentum down. I think the pros will sell it short against 81.04. But if you take out today's high of 81.40, then I'll target wherever that Bollinger Band comes in. That would be the bear trap. Right now it's not there. Why? Because the U.S. dollar took off and interest rates in the U.S. rose today. That's an enemy to the emerging markets. Gold, you're going to get hit tomorrow in this trade because I'm already watching the futures down $45 tonight. So lower highs, lower lows. The battleground is the 200-day, and I'll take off today's action. There's the 200-day average. You bounce up to the Bollinger Band. Today you fall back. Will you rally back to that tomorrow is going to be the question. In the meantime, you're oversold in a downtrend, not in an uptrend. Can it make the 168.37 level is what the bears will have on their mind. In the gold miners, as far as I'm concerned, I told all my traders and futures, be out of everything. The trend is down. Next objective here, this was yesterday, if it gets there, and if that gives ground down here. But you're oversold as can be. I don't give you that elbow in the side and say sell oversold conditions or buy overbought ones. Oversold now, lost its embedded reading. 100-day average is the target. Wherever that comes in, you're about $1 from it. 70s, yeah, about $1.20. No, wait a minute. Yeah, you're about $1.20 from it right now. I expect it to be hit. That is the target when you lose the embedded reading. FXE, all the way down here. You can see that it's been in trouble. It is oversold. Did the worst hit these markets? You know, one of the things you have to understand in foreign currencies, they're interest rate sensitive. So they're going to look at things. I am of the school that the Fed is going to be the last big central bank to raise interest rates. The other banks will be ahead of the Fed. And if they're ahead of the Fed, they'll get the push to the upside. We'll be the last one. We'll see if I'm right on that scenario. That's going to play out over time. Right now, getting hit, they probably like the fact that the euro's down. It helps them with their tourist season and other things at this point. But you're down to the 100-day average, the lower Bollinger Band, in an oversold condition. I think the pros taking their money off the table. So you put it together, you try to come up with game plans, and that's exactly what I try to do for you at 8:40 in the morning. At 8:40, I think I'm a seasoned pro. I've been around these charts long enough. Frankly, I don't even like a name on a chart. I'd rather look at the chart, the pattern. I don't want to know the fundamentals. Here's what I want to know about fundamentals. I want to know when major reports are coming out because I think you have to be out of the market. Why do I say that? Because they change the landscape on you. That's why they're called major reports. You don't know what they're going to do. So during the week, Monday through Friday, I cover all this with daily charts, and on the weekend, all weekly charts with the same thing. I make it inexpensive, easy to access, $8.95 for the first 30 days. Each video is approximately 20 minutes long. There's 6 a week of these. You're not getting that for $8.95 anywhere else. And I cover, just like I showed you there, all these different sectors so you can see what is going on. Now, there's one other thing. I want my subscribers, I'm going to say this in the morning, hey, write me. Should we rotate out of some of what we've been covering and let's get some new stuff in there? I'm ready for it, and I do that on a regular basis, but I rely on them to give me the ones to cover, but they have to have good volume. You know, a lot of people write me, they want me to cover something that the volume's non-existent because they're paying attention to it. I can't do that. We have too big of a following. So if you're interested in this free trial, if you want, you can subscribe. Just go to the website. You'll see under free offers, it's there. If you want to subscribe, just go up to the research. It's right there. Once you try it, you generally get hooked on it. I'm Ira Epstein. Have a great day. I will see you all tomorrow. Take care.